Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, April the 5th, 2016, and this is the Daily Report for Gold and Silver. We do have a strong rally in the precious metals markets, all trading moderately higher on the day. Gold trading up about $16 at about $12.30 and change on the day. The low has been $12.15, the high $12.35, so we're just a couple of dollars off the high. And the real question is whether or not this most recent correction has terminated, whether we're looking at higher prices ahead, or whether or not we have a little bit more downside in the marketplace. That is exactly what we'll explore on today's Daily Report. So traders, I must tell you, today's higher move, and especially trading overseas last night, in which we saw the market trading up around 33, 34, 35, took me a little bit by surprise. I looked at dollar strength, and it was really predominant buying in the market and not necessarily the relative weakness of the dollar moving gold prices higher. And to me, I am bullish overall, as you know, but my concern was whether or not we in fact have seen an end to the correction, and the correction that really began at these prices at around $12.87. And you can clearly see that top right here. I believe that that concluded a subcount of one. Of course, that subcount of one was composed of a count behind it, 1, 2, 3, 4, and 5, concluding that. And of course, this subcount, we will have a 5 count, 1, 2, 3, 4, 5 of the subcount to give us our intermediate one, and that took us into our correction. Now, this correction, I had originally thought had terminated with a conclusion to our C wave when we had an intraday low of approximately 1208. That certainly wasn't the case. Market came up to about 1243 and started moving down, and then we got an intraday low that was just above that. So here's what I'm looking at now. We certainly popped off of the bottom of the market as we moved up today, but look at this. We've got a series of lower highs that come in, absolutely sloping. We also now have a series of higher lows coming in, and that to me spells apex and compression triangle. So my sense is that when this market does reach the apex of this particular pattern, we are going to look for a break. And since we are looking for the possibility of a conclusion of this correction, I believe that a move above this particular point is going to be extremely bullish and give us some technical confirmation that in fact what we are now looking at within the market is a true breakout to the upside, and really more importantly, a conclusion of this current correction. Now traders, as you know, we took a small hit in the market as we tried to make this upside play that occurred when we had this first intraday low at around 1206. We did get stopped out as this market came back down. We've got, over the last 6 trades, I believe 5 of them profitable. The last one, of course, was a loser. I definitely want to strike gold on this next trade, so I'm being a little bit cautious about entering the market. But I will tell you this, with the kind of move that we are seeing, this compression here, the fact that we had such resilience in the way the market has really popped up, let's see how it reacts as it comes closer to the apex, because we're getting that narrowing of range that we look for. And if we do get that breakout to the upside, of course, we're going to go ahead and issue a buy signal. Of course, traders, the other way to look at this market is to take a much longer term view. The last chart that we looked at was really composed of half-day candles. This is composed of daily candles, but they're highly compressed. We could almost put a weekly chart in here. But this is really giving us the big picture. We are still under the impression and belief that we hit a major bottom at 1040, 1051, concluding our A wave. We are now in a major B. Major B is going to be composed of I believe, a 5 count to the upside. And we are just within, I believe, the possibility that we have terminated our wave 2 and are now going into wave 3. And as I said before, realize that it will take a 5 count, 1, 2, 3, 4, and it's not to scale, obviously, 5, and that would give us our intermediate wave 1. We've got a total of 5 intermediate waves up on the B wave, a minimum of 3, depending on how we determine the count on this market, but there's a lot of upside room, and that is what excites me. Secondly, I do believe that once this market gives us that technical confirmation that we have concluded this correction, as I said, wave 3 should take us back over 1300 at least, because we're going to look at waves 1 and waves 3 under the Elliott wave rule of wave 3 cannot be the shortest of any of the impulse waves. And you consider the magnitude of the move that we saw in wave 1, if in fact that model holds true, we could be in for some real fireworks and upside moves in gold. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.